Hi, my name is Roland Vive, and I'd like to thank you for listening to my podcast today. So today's topic will be what I call the guru mentality. I've spent literally 0 minutes of my life on Facebook, but that doesn't mean I don't use social media. I do spend some time on Twitter and more recently a lot of time on LinkedIn. And one of the things I've noticed, LinkedIn is a wonderful platform. It helps you, depending on who you follow, it helps you keep informed with what's happening in the business community in Ottawa. It helps you keep in touch with people who are in your industry and some of the interesting information that comes out of that. And, their curated news feeds I find to be quite interesting. So while it seems that I might be picking on LinkedIn for the next few minutes, I just want to start off by saying that I am a fan. But as I've taken more of a deep dive and spent more time on the platform, I've kind of realized that we live in a world now where everyone is an expert. Everyone is a guru. They have this level of expertise and advice that they keep bombarding you with. And, it's kind of, I find it to be interesting because I've been given advice by people who are gurus and experts in the accounting world. And it gave me pause to think that perhaps, all of these ideas floating out there may not be necessarily the greatest ideas. Certainly, there are things that you can learn from these platforms and incorporate into your business. And, they can be helpful. But I guess what I'm saying here is don't always take for gold what you hear out there and at least apply some sort of critical thinking to the advice of these so-called experts. So I'm going to talk about 3 topics. They would have application to many different types of businesses. I think the examples that I use are going to be more accounting and the accounting world specific, but I think some of the messaging in terms of don't believe everything that you hear out there would apply to different industries. Although, like I said, I'm going to be using examples that are more specific to the tax and accounting world. So the first thing I want to talk about is outsourcing. I've been told many times, I've attended some accounting seminars, and I've actually seen this thinking on LinkedIn that basically says, if you want to be successful and truly profitable in the accounting world, you need to outsource. You need to look at the work you do and outsource the stuff which brings little value. It's necessary, but it brings little value and is what would be considered to be low margin work. So, in a typical example, if I look at our practice, it might involve outsourcing the preparation of personal tax returns. I've been contacted from organizations and companies offshore. So, the few that I've been contacted by are from India. And basically their value proposition is don't bother wasting your time doing personal tax returns. We know it's a necessary evil for a practice when you're doing tax and accounting. But use us, send us all your data, and we'll prepare the tax returns. And because of the time difference, at the end of the day, you send off your information, and when you wake up in the morning, the tax elves have done their work and all your tax returns are completed. And it's generally done at what they say is a high quality. There are people living in India who are highly trained in Canadian tax and U.S. tax, so they've got the level of expertise. And that's kind of how this model is supposed to work. You send stuff off, it gets done at a lower cost, and you can do it yourself. And apparently the quality and timing of it is such that it's win-win for everybody. So, what could possibly go wrong with that? Well, where do you start? The first thing is there's a matter of security. How do you get your client's personal tax information to deliver to some organization in a different country that's 12 hours away? And how do you do it securely? So, you have to look at whether or not there are secure channels to transmit that information. And even if there are secure channels on the transmission part, how is it handled on the other side? When you do personal tax returns, you see absolutely everything about a person's life. Their name, their date of birth, their social insurance number, how much money they make, their direct deposit information, and by the way, here's all of the medical expenses they've incurred and all the charities they donate to. So, that's really, really intimate information that we have. So although the transmission channel might be good, You can't really know for sure how it's being handled on the other side. But that's, I mean, for me, that would be a huge concern, but it's also just one of the problems that I think outsourcing brings. So if I were to talk to my peers, people who run other accounting firms in Ottawa, pretty much anywhere in the country, or for that matter, any other business owner, regardless of what you do, had you asked them, what is one of their biggest problems that they deal with on a day-to-day basis? What are some of the more strategic limitations for them growing their business? And the answer is always going to be the same. I can't find enough good people. And is particularly in the tax and accounting world, everybody is looking for, great talent. And outsourcing, I think, is part of that problem. Although, you're technically only outsourcing the really low-level work, I think what ends up happening invariably is that you're outsourcing work, which, although to you it might be low-level and it might be low margin, but it's actually really interesting work for people who are starting off in their career. If you talk to any tax practitioner who has been quite successful and has done well for themselves, he or she has literally done thousands and thousands of tax returns over the course of their career. Some of them easy, some of them exceedingly difficult. But that is kind of a starting building block. You can't be a good tax practitioner. I'm going to use that as an example. You can't be a good tax practitioner if you haven't done tax returns, and not 10 or 20, but 1,000, 2,000, 3,000. And so I think on one level you might be saving some money, and even if you were to address the security concerns, you're actually preventing the next generation of professionals from developing properly. And even though, again, that might be low-level work initially, people who prepare tax returns eventually review tax returns. And those who review tax returns eventually get involved in more high-level planning, tax planning, estate planning. So these are all building blocks. So if you might outsource all your tax returns, but then there's no one to review them for the quality and that error control. And, you have no one to blame but yourself that you don't have anybody in your firm who does a good job of reviewing tax returns because, they've never had the chance to prepare them. And it's just this cascading effect. So I think, outsourcing is, although it might lead to short-term profits, and it might help you with your short-term staffing problems, right? You don't have enough people to actually prepare tax returns in your firm. But so, I'm going to plug the hole. But I think that's kind of a lazy person's approach to solving this problem. I think what you need to do is you need to go out there, you need to hire young accountants, you need to invest the time to train them, get their skills up, and bring and retain that expertise in-house. Because once it goes offshore, you're never going to get that back, and you end up with an entire gap in your firm where just those skills just don't exist anymore. And I just don't think those who are advocating outsourcing as one of these, you got to do this. Those who have that mentality, I just don't think they're thinking about the big picture. And I think it's really a short-term focus and a lazy solution to a problem. And then, final point on that, I don't want to beat it up too much, but accountants are not cheap. Their clients pay good money to have tax work done, and you're paying for their expertise. And I don't know, when you sit across the table from a client discussing their tax position and the returns that we just filed and kind of doing some big planning, that they would be overly happy to know that their tax returns were done overseas in an organization that you've never met and you don't know about. So I think, again, just kind of client perception, if that was to get out, I don't think it would be very well received. I certainly know it wouldn't be well received by my clients, and I wouldn't blame them. The other thing I want to talk about is the idea of needing to be in the cloud. The general thinking out there is that you don't bother maintaining your own server. You need to just kind of have everything in the cloud and use the infrastructure of big organizations and let them run things for you. And that applies to software as well. Just, don't bother. Just pay a monthly subscription. Everything will be in the cloud, and you can focus on just doing the work that you do. Being in the cloud, again, if I use the tax and accounting world context, it makes sense in some regards. Tax software is very complex. It has many updates throughout the year as legislation changes, and it's an organic piece of software, so it's constantly changing. During tax season, for example, it's not unusual to get 4 or 5 updates and sometimes more in a very short period of time, and these are pretty critical updates. So you may or may not have a good IT group. I have a very good IT group, but they don't instantly install things. So if you run some of your software in the cloud, you're guaranteed that it's always up to date, because it's essentially run by the software manufacturer. They produce the software and they host the applications in the cloud on their servers. So it's always up to date. The other thing is that there are backups. You're relying on their infrastructure so that if something was to go wrong in your office, all of the data is resident in the cloud and you don't have to worry about it. And it allows you to work remotely. If you happen to work off-site or work from home, or be lucky enough to go down south during the winter and you happen to be a tax practitioner, then you can work remotely from wherever you happen to be if your applications are in the cloud. So I see the benefits of that. I mean, I totally understand the value proposition of it. And in some cases, it's actually cheaper than buying and maintaining your own servers. So what's not to love about that? Well, this is a specific example of something that happened just a few months ago, actually. One of the big U.S. tax software companies, in fact, they're a global company. They're a dominant player in the tax software, where the world where you prepare your tax returns. And they developed a software, and it's quite good. And they've pushed most of their clients into the cloud. So you don't run the program from your desktop, you run it from their servers. And a couple of months ago, they went dark. So they noticed some irregularities on their server. And because of the sensitivity of the data that they host, they shut down their servers. They shut down absolutely everything. They shut it down for 4 days. And nobody really knew what was going on, other than the odd press release saying, we noticed some irregularities in our software and something that was happening on one of our servers. So out of an abundance of caution, we're shutting everything down. So that kind of leads you to, it put a lot of CPA firms, particularly in the US, in a tough position, because now suddenly you have 20, 30, 100 people who really can't do anything for 4 days. And depending on what time of the year that is, that might be absolutely horrific if it's approaching a deadline. So I guess, that's really what got me thinking, is that, despite the benefits of the cloud, to some extent you are reliant on the uptime of the people who are hosting you. You would hope, given the size of the companies, and these are billion-dollar companies in some instances, that they have the infrastructure and all of the things that you can't afford to have, that they have those procedures in place, and that uptime is 100%, and that security is 100%. And we just don't live in that world. I don't know if we'll ever live in that world. I'm not an IT security person, but it seems that every week there's a massive data breach. And I'm not saying there was a data breach in this instance, but stuff happens in the cloud. And if you put all of your mission critical applications in the cloud, you are taking what is a vital part of your organization and you're removing it from your control. And for me, that's something that, we don't have a lot of choice sometimes, right? If you subscribe to certain pieces of software or certain applications and they're only in the cloud, then you have no choice. But, the cloud is not the be all and end all. And I think, there's an obligation on the part of software providers and anybody who's operating in the cloud to actually have infrastructure. It's a commitment to your people that, to your customers rather, that they need to take that data seriously and the uptime seriously. So, I do resist. I would resist trying to put mission critical applications in the cloud, simply because I have more faith in myself and my IT people maintaining our infrastructure than I would someone else given some of these circumstances. Now, I mean, it's not to say, using ourselves as an example, it's not to say that we're not in the cloud. I mean, we have a server that's resident in our office. Everything's encrypted. The data is encrypted and it's backed up in the cloud. So even if somebody was to intercept that, it's useless to them. So there is off-site backups that we've got. But I would definitely be nervous about putting things that are make or break for the firm in the cloud, because I just don't think we're yet, if ever, at the stage where you can guarantee that it's going to be up and running when you need it, despite the obvious benefits of doing so. And finally, my last topic is, and this is an interesting one. It's talking about the billing models for accounting firms, and the genesis of this. I was again on LinkedIn, and I was contacted by someone who is an expert in the accounting world, and they had written a book, and they promised me that if they've got the magic sauce, and they will help me be successful and help my firm reach the next level and be wildly successful and wonderful in all the things that we're not currently doing. And I thanked them very much. I said, I appreciate this, but I think we're doing all right. And he offered to send me a book, and the book was about all the wonderful things that. Sorry, let me rephrase that. The book was about essentially, here's what you got to do if you want to be successful in the accounting world. So he sent me a copy, and it arrived in the mail just as promised, and wonderful inscription on the inside. And I read the book, and I really enjoyed reading it. But it was advice, again, which fell into that category of, if you're not doing this, you're crazy. And if you're not doing this, you're a dinosaur. And one of the things they talked about was the accounting firm billing model. And that really, again, it really got me thinking, because there's no right or wrong in this world. So how do accounting firms work? Well, the traditional model, and this also includes law firms, and essentially any firm, professional services firm, but lawyers and accountants generally follow this model, which is the chargeable hour. So we're like glorified taxis, and when you work on a particular engagement, you put the timer on, and when you're done working on that engagement, you turn the timer off, and you looked at how much time you spent on that, and the bill that the client pays for at the end of the process is dependent on how much time people spend on the engagement. So essentially, time is our product. That's what we sell, and the chargeable hour is how we manage that and how we measure that. So and it's been like that since the beginning of time. So newer billing models are starting to emerge, and that's kind of more on the value billing. So it doesn't matter how much time you spend on something. The question is, you should be billing what it's worth. And again, the other part of that is, if you take the example of a lawyer, because I'll pick on lawyers right now. If you can do something in an hour and charge a client $500 for it, or because you're really fast and really good at it, or you're actually not very fast at it and it takes you 10 hours, and you send the client a bill for $5,000, and either way, assuming the client pays for it, why would you do something in 1 hour and get paid $500 when you can take 10 hours to do it? So the thinking being that the chargeable hour model disincents you to be effective and efficient, because regardless of how good or quick you are at something, the longer it takes, the more you make. And the assumption there, of course, is that the client's going to pay for that. So the value billing model basically says, ignore how long it takes. You just ditch timesheets. Forget about recording your time. Never, and that's a burden. One of the things that accountants hate when you're in public accounting is tracking your time. The timesheet is really important. So ditch the timesheet and do the work for the client, and you bill them what it's worth, not how long it took you. And the chargeable hour is now gone out the door, and never to be. You don't mention that word ever again. So there's some element of truth to that, but on one level it doesn't happen all the time. But there are instances where you can meet a client and they've got a big problem, and you might be able to save them, let's say $100,000 for after a 1 or 2 hour consultation. Like I'm telling you, it doesn't happen all the time, but these things do happen. So if you spend an hour of time, 2 hours, let's say 2 hours, and you save someone $100,000 and you give them a bill for $20K, because, hey, I saved you $100,000 and I'm only charging you $20, but they know it only took you 2 hours. My clients are sophisticated, they're smart people, and they don't mind paying for things, but they certainly would not pay a $20,000 bill for something that only took me 1 or 2 hours to do. So, value billing makes sense in some instances, but majority of the time it's not going to work out like it does on paper. And the other thing about, tracking chargeable hours, if I kind of look at how we do things internally here, it's a great way to measure people's performance. Now, we don't use chargeable hours in a negative way. I mean, we measure. Take the example of a younger accountant, somebody starting out in their career. If you were to ditch the timesheets and just simply say, okay, here's a job, go do it, and you don't really know how much time they're spending on things, then you really don't know how they're doing. By tracking chargeable hours, I think it's quite important because you can see where people are spinning their wheels. It helps you. It's a tool for us to help understand how particularly some of our more junior staff are doing on engagement. So if something should take 8 hours and someone spent 24 hours doing it, it may be more complicated than thought, but in a lot of instances that person, might be just in a little bit more over their head than they thought they would be. And by tracking chargeable hours like that, you can see how people are performing and find out where they're struggling. And the other thing is, it does really, depending on the nature of your practice. I mean, the type of work that we do here is we do have some fairly big engagements where we'll do, corporate, we'll do financial statements, we'll do tax returns for clients, and those are generally done after their year end. But and the amount of time that is invested in those is pretty easy to judge. But a lot of times when you become a trusted advisor to your clients, you're constantly involved in various decisions with them, helping them make strategic decisions, whether it's to acquire a building or whatever it happens to be, expand into new markets. So if you're just, doing the bread and butter accounting work, then, the chargeable hour might not be that important. But when you start being more of that trusted advisor type of person, then you're constantly involved with your clients. You're spending, a few hours here, a few hours there, and it might happen on a weekly or sometimes daily basis, depending on what they're going through. So, it becomes difficult to measure the contribution you're making to a client if you're actually ditching the chargeable hour. So, that's just an example of that, expert / guru mentality where, unchain yourself. Don't be burdened by the timesheet and go off and do things and just bill people what you think it's worth. And I just don't think that works. And it certainly wouldn't work in many practices, despite, what people say. So again, that's just an example of something sounding good on paper. It allows people to provide their expert commentary, but it really doesn't apply in the real world. And, that's what I wanted to talk about today. Regardless, again, some of these examples have been specific to the accounting world, but if you are, regardless of the business you're in, don't feel like you need to listen to the experts. I guess that's my takeaway. They have good ideas. It might challenge some of the traditional thinking, get you out of your box, so to speak. And but the fact that some of these things are floating out there, some of these ideas might have interesting elements to them. Just because you're not adopting them, don't feel like you're a dinosaur in any way. Some of the practices that you've been involved in, some of the practices we've been involved in, have been around for a long time. And they've been around for a long time because they work. And, it's great to incorporate or at least look at new ideas. But just because someone on LinkedIn says you've got to do it doesn't mean you've got to do it. Thank you.